I know a lot of traders that take profit too early. They close the trade because they're fearful that they will give profits back to the market. If you feel yourself in this one, keep watching, because in this video I'll show you exactly where I put my second take profit, so the winners have space to run and actually get that R collected that you need. In the last episode we talked about take profit 1. If you didn't watch it, go watch it first of all so that you definitely know where to take that first take profit. That is where we secure our first profit. But a good trade often continues further than this. That is where my second take profit comes into place. Why do I have a second take profit? My second take profit has a different goal than my first take profit. My first take profit is to make sure that some profits are protected. My second take profit allows the trade to capture the real move what I was actually expecting to happen. Professional traders let a portion of their position continue toward liquidity. A liquidity is actually where the next break of structure should be, a highs or lows, and this is where we take our second take profit. Liquidity targets. Markets moves with fuel, and fuel for the market is liquidity. So the market moves from liquidity to liquidity. That means price often moves towards previous highs, previous lows, equal highs, obvious tops, obvious liquidity pools. These areas become natural targets for the market. If you can spot them, then you can actually decide where your second take profit should be. My risk to reward rule is, if we have a trade that we can take after a break of structure, we had a retest into a fair value gap that lays in discounted or premium area, and we can continue the market's rally. I want to see that that trade has a potential of about a 2.5 R an average. If that trade does not gives that potential, I will skip that trade entirely. The reason is very simple, because this way it's easy for us to gain back what we gave to the market. If that potential is not met, we just skip that trade and go up to the next day. An example of a trade. Say that we have a bullish trade. We had a break of structure to the upside. We had a 15-minute fair value gap laying in a discounted area. We had a limit order placed inside, and we put our stop at the higher time frames. So my first take profit, what you saw in the previous episode, is the body's close of that retest of break of structure. So we have a candle that created the down structure back to that fair value gap. Once we make a new break of structure in that 15, that first bodies is our first TP. The second TP is the next higher time frame liquidity pool. That's what the market is actually drawn to. And often that aligns with around a 2.5 R collected in total. Now, how do you manage the trade while you're in it? First of all, if we reach my first take profit, this actually is about the same that I take out of the market. That is the same leftover as my stop. So that means that the market comes back to my stop, that actually we didn't give anything to the market and we didn't gain anything. So this prevents us from wanting to stop that trade too early. It helps you maintain a certain mindset. It helps you maintain calmness. And the rest of the position, we let it run. We let the market do its thing, what it wants to do, and it goes most of the times to that second liquidity. That's where we take our second TP. So trading is still the most important thing about trading is still the mindset. The goal is not to predict the tops nor to get the maximum out of one trade. The goal is to build a repeatable system that you can repeat over and over and over and over again. Not every trade goes to our second take profit. And not even all trades goes to our first take profit. If we're incorrect, that's okay. That means that the market decided to do something different today. And that's normal. We are not here to predict to have a 100% win rate. This full strategy, what I'm just explaining to you, we got about a 62 to 65% win rate. And that's a very good average. If you can keep it that way, you'll be a very profitable trader. If you still have doubts and how everything works, I got a one-on-one mentorship class that you can follow or join. In the description below, you got a link. I also have a full course in how everything works that you can study for yourself. If that is something that you really want and you want to take your trading to the next level, just tap the link below and you can go to it. I will see you inside my Discord where we trade live together every day. So remember the structure of our trade. The structure gives the direction. So does it give break of structure to the upside or down? That shows the direction. For value gaps, give our entry. So if the risk is created of a 15-minute value gap in the right place, you can take that as an entry. Stop loss, define the risk. That means that the stop loss is there to prevent us from giving too much back to the market. Our first take profit is where we secure some profits to make sure that we can stay in the game long enough. The second take profit is where we make our gains, so that where liquidity pools are and we can sweep it. In the next episode, I'll show you my 2.5 filter when a setup is not worth trading at all.